Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
Now, we've talked about meltdowns and true systemic risk and gut-churning moves that are untethered from the economy. But how about the garden variety pullbacks we experience all the time? What causes these declines? Well, there are usually a bunch of different varieties. First, you've got the sell-offs caused by the Federal Reserve. That's probably the most frequent reason for stock dumping. There's a reason that business media constantly talks about the Fed. When the economy is weakening, it's the Federal Reserve's job to try to restore growth, which they did with aplomb when COVID shut down the economy in 2020. As long as the Fed's printing money, almost every decline is a viable one. It's just a fact of life. It's been like that since I got in the business. But when the economy is strengthening and perhaps starts to overheat, well, the Fed has a different mandate, stamping out inflation. When the Fed declared war on inflation in late 2021, the market started rolling over with the highest risk groups getting eviscerated. Now, nobody wants persistently high inflation. Those of you who missed the 70s and 80s now know from the post-COVID experience. But we also don't want the Fed to break the economy like it did when it raised rates 17 straight times in lockstep going into the Great Recession. It caused the Great Recession. Now, there are plenty of times when the Fed's tightening, but the stock market didn't get crushed because the economy didn't get crushed. And that's how we got the incredible bull market in the first half of 2023. However, whenever the Fed tightens, some prognosticators will come out of the woodwork to tell you the market will crash or at least take a very big header. That's inevitable. So when you hear these comments, please don't panic. Fed rate hikes don't necessarily lead to crashes. In fact, I've seen plenty that do next to nothing. But there are rational reasons why the stock market deserves to go down when the Fed tightens, and I'm not ignoring them.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.